When we come back, we'll head for the shark-infested waters of stock investing. We'll get some tips that could help you swim with the big fish in 2008. More Money for Breakfast is on the way.
Thanks so much. We appreciate it. Well, coming up next, shark investors use their small size, quickness, and aggressiveness to outswim big, slow-moving market fish. Now, James RevShark DePore, the author of the book Invest Like a Shark, says even the average small fish can be part of the sea of wealth. Take a listen.
Shark investing is the idea that the individual investor has some great advantages over the whales of Wall Street, the big institutions and so on. We've been told by a lot of the pundits and so on that we should invest like a miniature mutual fund. But it's my idea that we should invest like sharks. We should be fast, we should be aggressive, we should be flexible. If there's danger, we get out of the water, and we use the advantages we have of being small.
And this way of investing has made you a lot of money. Tell us, how did you get interested in investing in the markets in the first place?
Well, it was sort of a big accident. I was an attorney and CPA in Ann Arbor, Michigan. I lost my hearing completely. I went totally deaf. I had nothing to support myself with, and I started dabbling on the internet. The internet had just started to come into becoming more popular, and I was able to start doing a little bit of stock picking online. And it became clear to me that as a small guy, I had some great advantages. So I was able to, build my money up by actively investing, by being aggressive. When I found a good opportunity, I went after it hard. And then I sold it when the time was right. And I didn't sit there and hope that it was going to compound further over the course of many years. I looked at making money now, and I preserved it as best I could. And I was able to multiply my funds exponentially over a long period of time then.
What did you see in the markets that made you understand when to get in and when to get out?
The market is all about emotions. People like to think it's fundamentals that matter, but it isn't. You have to trade the emotions of other people. And once you understand that it's all about sentiment, it's a big chess game. And I think that's what was the appeal to me was. It's a psychology and strategy and those things. And if you think about that when you look at the stock market, it's a fun game to play. And that's what the big appeal to me.
What are your New Year's investing resolutions, your recommendations?
Well, I think the key thing, especially for me, I still have to be more aggressive. And I think the individual investor needs to be more aggressive. That doesn't mean being impatient. It means when the time is right, you take bigger size. And when the time is wrong, you get out and you don't hesitate. That's the #1 resolution I think most people need to make.
And what would you recommend? You're sitting at home right now, you don't do it, you're not very comfortable, you're unsure of yourself. How do you start to dabble in and become more comfortable?
Well, I think the first thing you need to do is start following shows like this. That's #1, and I think familiarity makes it a lot easier. It helps a lot if you start looking at charts. Charts are very important because they give you a framework in which to operate. You can see, if a stock's near its high, near its low, where people are selling and buying. So I think the first step that most people need to make is get comfortable with those charts. Start looking at them.
All right, well, James, this is a terrific book. It's called Invest Like a Shark, How a Deaf Guy with No Job and Limited Capital Made a Fortune Investing in the Stock Market. Thanks so much, James, for joining us this morning. And we'll be back in just a moment with much more Money for Breakfast.